Today we are going to discuss about Everest Kanto Cylinder, market leader in cylinder business. In this video we will explain business model, future growth prospect, leadership, valuations, financials, key strength, etc. Make sure you stick around till the end for better learning. Hey everyone, my name is Hariom and you are watching Trading with Hariom. Everest Kanto Cylinder is a manufacturer of steel gas cylinder with 20 million plus industrial gas and CNG cylinders. It is the largest Asian manufacturer of high pressure gas cylinders. They are having CNG cylinders, industrial cylinders, medical oxygens and cylinders for hydrogen gases. These cylinders are used for high pressure storage of gases such as hydrogen, nitrogen, helium, argon, etc. and find applications in wide variety of industries such as manufacturing, fire equipment, medical establishment, aerospace, defense and automobiles. The company sells its product in all states across India and serves 25 plus countries include Europe, USA, South America and Southeast Asia. India contributed 62% of revenue, UAE contributed 18% of revenue and USA and Hungary contributed 20% of revenue. The company has 150 plus strong client base consisting of OEMs like Bajaj Auto, Tata Motors, Ashok Leyland, Mahindra & Mahindra and Volvo Eicher. It also supplies CNG storage cascade to CNG stations and city gas distribution vendors like Torrent Gas, HPCL, IOCL and Adani Gas. In India, the company has two facilities at Tarapur, Maharashtra, Gujarat and Kandla and having a total capacity of 11 lakh units. In overseas, it has a facility in Dubai having a 2,40,000 capacity, a capacity of 4,000 jumbo tubes and a 10,000 Type 4 composite cylinder in Pittsburgh, USA. The total capacity utilization in current FY stood at 65%. The company has planned an expansion of 6 lakh cylinders in India with an amount of 80 crore and 2,40,000 cylinders in Hungary with an amount of 140 crore by FY24. Out of total plant capacity, 2 lakh units have been commissioned to date. Post expansion, the total capacity will increase to 18 lakh units and the company expect additional revenue of 725 crore. Now we will discuss future growth prospect of Everest Kanto cylinders. With the global shift toward the cleaner energy, the adoption of CNG in vehicle is increasing. In India, the government policies promoting alternative fuels due to stricter emission norms like BS6. The Indian government is expanding CNG distribution network which could drive demand for high pressure CNG cylinders. The demand for oxygen cylinders surged during pandemic and it is expected to remain steady due to improved healthcare infrastructure. Cylinders for gases like hydrogen, nitrogen and argon have growing demand in industries such as manufacturing, food processing and pharmaceuticals. EKC could benefit from the global push toward the green hydrogen adoption. Cylinders and storage solutions for hydrogen are critical for the clean energy transition. India's national green hydrogen missions may unlock new revenue streams for EKC. EKC is one of the largest cylinder manufacturers globally. With the strong export presence, the demand for high pressure gas cylinder in international market may provide growth opportunity for EKCs. EKC has been expanding manufacturing facilities and the company has expect additional 725 crore revenue. With the efficiency improvement may lead better margins and growth. There is a growing demand for composite cylinders which are lightweight and safer as compared to traditional steel cylinders. EKC has the opportunity to expand in these segments by the help of R&D. Now we will discuss leadership. Pushkar Khurana, Chairman and Executive Director of EKC, holds a Commerce degree from Mumbai University and has completed Business Management course from Harvard University and has having a 30 years of experience from international business. Now let's talk about numbers. In the most recent trailing 12 months, the company has generated 1,365 crore revenue, a growth of 11% as compared to previous FY24's revenue. In trailing 12 months, Everest Kanto Cylinder posted a 116 crore of net profit with the operating profit margin of 13% and with the growth of 18% as compared to FY24's net profit. This shows EKC's ability to maintain cost efficiency despite fluctuating raw material prices. Everest Kanto Cylinder generate a 5-year revenue CAGR of 12% and a net profit CAGR of 11%. One critical factor to analyze is the company's debt position. As of FY24, the EKC has a debt to equity of 0.14, which is low for its industry. The company has been working to reduce debt and investors should keep eye on how this evolve. Now coming to the valuation, EKC command a market cap of 1700 crore, which indicate a high risk high reward company. In that case, definitely we will look for the valuation. Currently EKC command a PE of 15, which is equal to the 5 years of median PE and lower than its industry PE of 25. Now let's talk about key risk. Steel and other raw material cost could impact margins if prices remain volatile. Local and global competitors could pressure EKC's market share. Delay in CNG infrastructure expansion or changes in government policies might slow growth. Now let's talk about the technical chart pattern of EKC. Let's take a closer look at EKC's chart. As you can see, the stock formed a beautiful curve with handle pattern over the past 2 years. The curve showed a gradual recovery from its lows, while the handle was a brief consolidation phase where the stock tested support levels. The resistance line was at 195 level, which the stock struggled to break initially. The breakout happened on 16th of September 24 when the price surged above this level with a significant increase in volume. One of the most important aspects of a curve with handle breakout is volume confirmation, and EKC did not disappoint. Notice how the volume spiked significantly during the breakout, indicating strong buying interest. This is a textbook signal that institutional players or big traders are stepping in. So where could the stock head next? To estimate the price target for this pattern, we calculate the depth of the curve and project it upward from the breakout level. Now I'm going to give you homework. Calculate the depth of the curve and project it upward the breakout level, and let me know in the comment below what will be the price target for the same. That's it for today's analysis. If you found this video helpful, please hit the like button, share it with your friends, and subscribe to Trading with Hariom for more in-depth stock analysis. Let me know in the comment below which stock you would like me to analyze next. See you in the next one. Till time, happy investing.